Indonesia stock market rebound expected. The Indonesian stock market took a downturn once again on Monday, just a day after ending a brief two-day decline during which it had lost nearly 140 points, or about 1.9%. Currently, the Jakarta Composite Index, JCI, is hovering just below the 7,465 mark, but there are strong indications it could regain momentum and receive fresh support on Tuesday. Here's where it gets interesting. Global sentiment towards Asian markets remains upbeat due to bargain hunters stepping in and growing optimism about a potential interest rate cut. This positive mood was reflected in the sharp gains seen in both European and U.S. stock markets over the past session, and the Asian markets, including Indonesia's, are expected to follow that promising lead. Despite Monday's slight dip, the JCI's decline was relatively mild. The index dropped 73.12 points, or 0.97%, concluding the day at 7,464.65, after trading between a low of 7,448.04 and a high of 7,560.06. Losses were primarily driven by financial sector stocks and cement manufacturers. However, this negative pressure was partly offset by gains in resource-related companies, which helped soften the overall market retreat. Looking more closely at individual stocks, Bank CIMB Niaga edged down by 0.29%. Bank Mandiri saw an uptick of 1.99%, and Bank Danamon Indonesia fell by 1.61%. While Bank Central Asia slipped slightly by 0.30%, Bank Rakyat Indonesia lost 0.80%. In telecommunications, Indosat Ooredoo Hutchison took a significant hit, dropping 3.06%. Cement companies Indocement and Semen Indonesia declined by 1.34% and 1.99% respectively. Indofood Sukses Makmur also experienced a decrease of 1.18%. On the upside, United Tractors jumped 1.98% and Astra International added 0.50%. Some resource sector players, such as Aneka Tambang, increased by 1.04%, and Vale Indonesia surged impressively by 5.90%. Timah also rose 1.51%. Other stocks like Bumi Resources, Bank Negara Indonesia, and Energy Mega Persada remained flat. Switching focus to Wall Street, the U.S. markets had a strong showing on Monday, recovering from sharp losses suffered the previous Friday. The Dow Jones Industrial Average climbed 585.06 points, or 1.34%. Closing at 44,173.64. The NASDAQ Composite surged 403.45 points, or 1.95%, to 21,053.58, while the SP 500 gained 91.93 points, or 1.47%, ending the day at 6,329.94. This rebound was driven by investors eager to snap up shares at reduced prices following a recent sell-off, which had shaken confidence and pulled the NASDAQ and SP 500 well below their record highs. But here's where it gets controversial. That steep drop last Friday was triggered by worries about the economic fallout from President Donald Trump's newly imposed tariffs, disappointing jobs data, and a sharp fall in Amazon's stock, a combination that raised questions about the health of the economy. However, many traders are now hopeful that the weaker employment numbers could encourage the Federal Reserve to cut interest rates in the upcoming month, fueling renewed buying enthusiasm. In fact, the CME Group's FedWatch tool reveals that the market's expectation of a 0.25% rate cut this September has shot up dramatically to 91.9%, from 63.1% just a week prior. Meanwhile, crude oil prices continued their downward trend on Monday, amid concerns about excess supply and fears that global economic growth might slow down due to the tariffs. Specifically, West Texas Intermediate WTI crude for September delivery fell by $1.06, a 1.57% drop, settling at $66.27 per barrel. Closer to home, Indonesia is poised to release its second quarter gross domestic product (GDP) figures today. Forecasts suggest a quarterly growth of 3.7% and year-over-year growth of 4.8%, which, if realized, would mark an improvement following a previous quarter that saw a slight contraction of 0.98% and an annual increase of 4.87%. These numbers will be closely watched as indicators of Indonesia's economic resilience amid global uncertainties. And this is the part most people miss. While the market movements and economic data offer valuable insights, interpretations can vary widely. Are these shifts temporary reactions to global noise, or do they signal deeper structural changes in Indonesia and worldwide economies? Does the optimism about rate cuts outweigh the fears of tariff impacts, or are markets dangerously complacent? We'd love to hear your thoughts. Do you agree with the current sentiment, or do you see risks that others are overlooking? Join the conversation and share your perspective.